Wow, what a day for the markets. We're not just talking about a little climb, we are talking about shattering records. So what's really going on under the hood here? Let's dig in and break down the forces driving this massive surge, and figure out what it all means for the road ahead.
It all kind of boils down to this one number. Just look at it, 6,617.71. Let that sink in for a second, because that number is a huge deal.
See, that's not just some random figure. That is the brand new record-closing high for the S&P 500. And it wasn't alone either. The tech-heavy Nasdaq also blasted off to a new all-time high today. That signals some serious confidence from investors.
So, the big question is, how did we get here? Well, it turns out there are really three key forces pushing the market to these incredible heights. We're going to unpack them one by one. First up, the Fed. Then a couple of tech titans making waves. And finally, a surprising global factor that's, believe it or not, setting records of its own.
Okay, so the biggest driver, and it's not even close, is the Federal Reserve. Right now, the market is pricing in a 95% chance that the Fed is going to cut interest rates by 1/4 point this Wednesday. And you know, in the world of finance, that's about as close to a sure thing as you can get. It is flooding the market with pure optimism. And here's where things get a little weird, a little counterintuitive. We've been seeing a string of weaker economic reports. You know, manufacturing is down, the jobs data has been a bit soft. Normally, that's cause for concern, right? But not right now. Right now, it's being seen as fantastic news because every weak data point just hammers home the idea that the Fed has absolutely no choice but to cut rates. It's this whole bad news is good news thing playing out in real time.
All right, driver number 2 is all about tech, and it really starts with this number, 2.5 million. That is how many shares of Tesla the CEO, Elon Musk, just bought. This is a massive vote of confidence. And get this, it's his first time buying his own company's shares since way back in 2020.
And the effect? Well, it's been absolutely electric. Since hitting a pretty rough low back in April, Tesla's stock has now rocketed back a staggering 85%. That's enough to pull the stock into positive territory for the entire year, and it has just completely flipped the script, reigniting faith across the tech sector.
And you can really see this mixed but ultimately positive tech story playing out with these two giants. On one hand, you have Oracle, whose stock absolutely soared after they raised their cloud forecast because of some huge new AI deals. But then on the other hand, AI darling Nvidia got hit with some tough news about an antitrust probe in China. You'd think that would sink it, but even after dipping at the open, it fought its way back to finish flat. That just shows you how resilient investors are feeling right now.
Now, let's talk about our third and much quieter force at play. This number you're looking at right now, that's the new record high price for a single ounce of gold. And this is really the paradox of today's market, isn't it? Even as stocks are hitting these euphoric new highs, there's this powerful undercurrent of anxiety. All the geopolitical tension out there is pushing investors to hedge their bets, to pile into so-called safe haven assets like gold. And that's exactly why gold is also hitting record highs. It's a fascinating split screen. Okay, so let's try to make sense of this for our own strategy. With both stocks and gold at record highs, it's a confusing picture. So where are the opportunities? And maybe more importantly, what are the hidden risks we really need to be watching out for? Based on what we saw today, 3 areas are really popping up on the radar. First, the AI infrastructure play is still very much alive. We're talking about companies like Oracle or even private ones like CoreWeave that are building the actual backbone of this revolution. Second, with rates looking like they're headed down, sectors that are super sensitive to borrowing costs, think real estate investment trusts, utilities, they could be poised for a real comeback. And finally, you got to keep an eye on small cap stocks. If this rally broadens out, we could see a major rotation of money from those mega cap giants into smaller, maybe undervalued companies.
So, how do we translate this into an actual portfolio strategy? Well, it really breaks down into 4 key actions. First, you maintain your focus on those winning AI and tech stories, but be picky. Second, you start to shift gradually into those rate-sensitive sectors. Third, remember that record gold price and diversify to protect against that geopolitical risk. And finally, you secure some cash. Always keep some powder dry so you can buy any dips. So with all that in our back pocket, what should you be watching like a hawk as soon as the opening bell rings tomorrow? Let's throw together a quick watch list. These 4 items right here are probably going to dominate the entire conversation. First up, Tesla. Can the momentum from that big buy from Musk keep going? Second, Nvidia. How is the market really going to digest this new risk coming out of China? Third, Oracle.
Are we going to get more details on those huge new AI contracts? And of course, the main event, the big one, the Fed's interest rate decision on Wednesday.
And all of this brings us to one final and really crucial thought. Today's record-setting rally, all of it, is built on this one core belief that the Fed can cut interest rates, stimulate the economy, without letting inflation run wild again. It's what they call a perfect landing. But that leaves us with one critical question to ponder as we watch these new highs. What happens if that perfect landing turns out to be a little bumpy?